Hello, and welcome to the final webinar in an educational series brought to you by Brown Flynn and Nasdaq. My name is Marissa Bridle, Associate Consultant and Marketing Manager for Brown Flynn, and the topic of today's webinar is Resilience, Leveraging Global Sustainability Initiatives to Your Business Advantage. As always, our moderator for today's webinar is Mike Wallace, Managing Director for Brown Flynn, along with Evan Harvey, Director of Corporate Responsibility for Nasdaq. We are joined by our special guest from the World Business Council for Sustainable Development, Chris Walker, Director of North American Operations, and Emily Grady, Manager of North American Operations. All participants are in listen-only mode. At any time, you may type a question into the question box, and we will address it during the Q&A portion of the webinar. If we do not get to your question during the webinar, we are happy to answer all questions in written form and distribute the answers via email. If you are experiencing any technical difficulties, please dial either number you see on the screen at the moment. Today's webinar is also being recorded and will be available for download starting next week. And with that, I will turn it over to Mike. Mike?
Thank you, Marissa, and thanks to all of you and for Evan and Chris and Emily for being here with us today. As Marissa pointed out, we have a great webinar in store for you today. It's going to be a nice wrap-up to the end of 2015 and also some forward-looking thinking into what's happening in 2016. So you all as business people and stakeholders in this type of initiative around sustainability are prepared for the things that are on the horizon. My name is Mike Wallace. I'm a Managing Director of Brown Flynn, and we are a corporate responsibility and sustainability consultancy firm. And we've been honored to be working with Evan Harvey and Nasdaq for the past year on this series of webinars. And if Marissa, if you can go into the next slide, I'm going to talk a little bit about the background of this program so that you all are familiar with it, and so that any new listeners on the call are aware of kind of the context around this. As we talk about regularly in these calls, there's an increasing number of investors that are heavily involved in this topic of sustainability now. And given that this webinar series is being done on behalf of NASDAQ and targeted to its issuers, we want to make that point very clear. This is probably the largest collection of investors that have ever come together on a common theme, and that theme is transparency around sustainability performance. Before you see a number of initiatives that are out there that are driving this agenda forward. And these are no longer just your socially responsible investors. These are a collection of very mainstream investors. And Marissa, if you could slide to the next one. As you'll see here, there's a collection of mainstream investors getting more and more involved in this topic. On the lower left-hand side of the slide are the traditional or more well-known socially responsible investors, the SRI community. Well, over time, they got the interest in the attention of the public pension plans and some large institutions like Harvard University and the state institutions like CalPERS and CalSTRS. And as those large asset owners became more aware of these issues, they started to look at their investment portfolios, look at both private and public equities, and they started to ask their suppliers, the mainstream asset managers, to step up and start doing research. So along the middle swath here you see some of the mainstream names, but it's worth your time to go look at those initiatives that we pointed out earlier so you see all the signatories that are involved in this initiative. Very easily you'll find many of your biggest investors are interested in the topic of environmental, social, and governance performance, or what is otherwise known as sustainability performance. Next slide, Marissa. And as this evolves, they're not just asking for just any type of information, and it's not necessarily just a feel-good kind of statement about your policy or your commitment to certain things. They're actually generally, these investors are referencing some of the world's leading frameworks, and we'll talk a little bit more about that in a couple of minutes when we get to World Business Council for Sustainable Development Online. And Evan will also bring up some of this as he talks about the stock exchange initiatives. But along the left-hand side, you see the world's leading drivers of sustainability reporting or transparency. Frameworks and institutions you've probably heard of. Many have heard of ISO. Some of the other ones may not be so familiar to you. In the middle are the research firms that are emerging and stepping up in a very, very significant way now. Robeco Sam doing the Dow Jones Sustainability Index. Institutions like Bloomberg now has ESG or sustainability information right on their terminal. And then at the back end there are awards and recognitions for companies that are doing a great job in this area of sustainability. And you realize that it's no longer just qualitative statements now. There's a lot of quantified data out there that's being gobbled up by these institutions as they read sustainability reports, look through websites, and look at other disclosures that companies are putting out there. And they're doing that because there's demand for it. The next slide just gives you a quick rundown of where you can see the previous webinars fully recorded for you in a webinar format, but the presentations are also downloadable so you can get all of this information. And you can see we've done a series of these with some fairly significant names out there in the marketplace, like Microsoft, BlackRock, and Bloomberg. Then we had a webinar on all of the 3 major reporting frameworks with the Global Reporting Initiative, the Sustainable Accounting Standards Board, and the International Integrated Reporting Council. Most recently, talking about the human factor and the value of human capital. And this webinar is going to wrap things up nicely with talk about the stock exchange activity, as well as how that's being played out in the marketplace. And then we're going to hear from the WBCSD and have them shed a little light on what businesses are doing to really be organized around this and how to kind of attack the situation. And finally, as a kind of a wrap up to the end of the year, the next slide just shows a recent article that I had the good fortune of working with Evan Harvey on, that you can also see a lot of details, a lot of links can be found in this article that take you to the sources of the information, including the guidelines and guidance that's being put out by the stock exchanges. So with that, I'm going to pass it over to Evan Harvey of Nasdaq, and he's going to give you a real up-to-date information on what's been happening at the stock exchange level. Over to you, Evan.
Thanks, Mike. It's a pleasure to welcome everybody to the last call of the year. It's been a terrific series, and we look forward to planning another series next year on topics. I'm pleased especially to welcome all the Nasdaq issuers on the call, and also the other stakeholders that care about this issue and have a voice in this project as we move forward. So, stock exchanges and sustainability, the history goes back 5 years or so to the United Nations Sustainable Stock Exchange Initiative, which you see on the screen here. It was a voluntary effort coordinated by the UN and the UN Global Compact and the UN Office for Financial Development, trying to figure out if stock exchanges had a way to drive things forward in terms of sustainable development, bringing more progressive, green, forward-thinking companies to market, developing products and services that target sustainable development, et cetera. So it's the group now numbers 45, I think, exchanges. So well over 2/3 of the stock exchanges on the planet are part of this group. Nasdaq was a founding member, as was a few other of the larger exchanges, but it's very broad and very diverse. And we finally got to the point earlier this year where we issued some guidance on where we think the right way forward is. So you see this screen here shows you some of the work product that we put out, but the most important one is the one that's at the top left there, the model guidance on reporting ESG information to investors. It's basically a document that states if you are a public company who looks for investors, and we all do, and care about or find value in sustainable practices and strategies, these are the particular practices that are important to stock exchanges, and these are the kinds of questions you should be asking internally and the kinds of audiences you should be engaging with externally. So we go to the next slide. The model guidance comes directly out of a lot of regulatory developments, market developments. We have signals from the EU, signals from Asia. We have a number of stock exchanges around the planet that have been very, very proactive on this. So Johannesburg and Brazil and India to some extent and Singapore. These are places where, as a condition of listing, you have to disclose environmental, social, and governance metrics. Most of the stock exchanges that are involved in the working groups, both at the UN and the WFE, are more ambivalent about the right methodology for collecting this data. Most will probably issue some sort of voluntary guidance or self-enrollment program where companies that are doing a good job and care about this and want to disclose metrics or performance indicators can do so with our help. This sort of gives you some sense of the kinds of subjects that are covered by the model guidance. If we go on to the next one. So I alluded to this other concurrent effort at the Trade Association, the World Federation of Exchanges. That's the group that I chair, and that's the trade association that binds together all of the stock exchanges on the planet. We have a slightly smaller group, 25 exchanges, very broad economically and geographically and socially for that matter. And our guidance that we put out was a little bit more concrete and specific than the guidance that came from the UN, which we definitely piggybacked on top of. Our guidance highlights certain metrics that we found fit a few criteria, and those criteria were: is it prevalent in most of the reporting frameworks that are already in existence? Does it fit into an existing rule set or best practice guideline at exchanges who are members of the trade association? Our best guess as to the deliverability of this data from companies, how burdensome would it be to produce this information and to talk about it publicly? So those were some of the criteria that we used in order to evaluate which metrics to select. And if you go to the next slide, this is a snapshot of what some of those metrics are. You know, we've called out a couple here, like supplier code of conduct. Do you have a supplier code of conduct? Do you publish it? Is it public? Is it regularly updated? A sustainability report. Does your company put out a standalone sustainability report? Do you participate in other framework disclosures? The idea behind this is not to become another competing framework or even to become the archivists of this kind of data, but to facilitate engagement between investors and companies. If you are talking about these issues and you have them disclosed in various places, then this is one way that you can start the conversation. The disclosures that we suggest here could all be linked. So if some of this is reported in GRI, and some of it is reported in CDP, and some of it is reported via SASB, some of it is reported via the Global Compact, you can link these disclosures and basically make it easier for the investor to find the information that they need. We don't suspect that this is a perfect list for everybody. We want the exchanges to take this list and our recommendations back to their local market, work with their issuers, work with their regulators, come up with something that makes sense. Obviously, a lot of the market concerns in Indonesia and Germany and the United States and Vietnam and all these other places are not uniform. There's no apples to apples comparison. So some of the things that we've called out here might be more appropriate in some circumstances than others. But the point is, it's a starting point for exchanges to create their own guidance and to start conversing with their issuers about the importance and the value of doing this kind of work. And that's the next slide. So that's really the end of the stock exchange update. I want to throw it back to Mike and get into the debate about the Sustainable Development Goals and the World Business Council on Sustainable Development, because in a lot of ways that represents the next evolutionary step in what the stock exchanges have been doing, trying to get better transparency out of listed companies. So I'll throw it back to you.
Thanks, Evan, and stay on the line because I do have a couple of questions for you before we move on to WBCSD's work. But I want to thank you again for the great update on that. You've been intimately involved with both these initiatives. Can you give us a little bit more history as to, were there certain stock exchanges that were out in front that caught the attention of the WFE to make them step up? I know we've heard stories of Johannesburg and Brazil, others that were really active in kind of pushing this along?
Well, there's no doubt that Nasdaq pushed it. We as an early participant, and not to toot our own horn on our own webinar, but I mean, we were participants in the UNSSD because we saw the value and the leverage that stock exchanges brought to this context, brought to this debate, and we saw that there was a certain amount of leverage that we had in terms of getting better data into the mix and getting more data into the mix and having a business-centric discussion with issuers about the value of doing this. So we pushed for it there. And then there were several exchanges at the WFE, not that they were disillusioned with the pace of change at the United Nations movement, but they just wanted to focus on more concrete measures. That's why our recommendation has actual KPIs. The UN recommendation is more principles-based, and they both work hand in hand. But a number of large stock exchanges stepped up at the WFE. Nasdaq, NYSE was an early member and a vocal participant, and even after they transitioned to ICE. About the only one that hasn't been as active on the WFE side is London, and that has to do with the fact that they're not a member of the trade association. They're about the only large exchange that's not a member. But I think you had a number of large competitive IPO exchanges who are not necessarily in the business of creating burdensome listing rules step up to the plate and say, what's the right way forward here?
Good, thanks for that. And you've been involved in these webinars over the past year. In fact, at one point we had one of your colleagues from Nasdaq there who actually helps companies with this type of issue. Can you explain a little bit more about that role? I mean, I would imagine a lot of issuers are coming to Nasdaq and saying, what's going on with this sustainability space? You guys are going to require this of me. I see you've put some guidelines out. Hey, Nasdaq, as an issuer, can you help me? How does that play out on your side?
It plays out as just part of the expertise and guidance that we offer all the issuers. I mean, on a previous call, we had Miguel Santosteve from our London office. He works on advisory services, basically advising issuers, especially in the European and Nordic space, around what investors are saying, how investment trends are affecting their participation in their stock, the kinds of access to investors who care about this topic that they might not be getting, by not being more public, by not having more of a position, by not being more disclosure oriented. So he's been our expert on that side, and we do this in a number of ways. I mean, we counsel companies, we have products and services that help companies that with all kinds of corporate governance issues. Basically, how to be a really effective and well-run public company is in our best interest, because stock exchanges list companies. We want companies to have great practices and a great culture in place, because we find the argument that contributes to the bottom line and in some ways makes them more financially competitive is useful and valuable for us to make that guess. So yes, there's a chance that if this was a listing rule, there would be, it would be more difficult to list. The burden would be higher. But there's also this other side of the equation, which says, we need to have insight into the way our listed companies are run, because we want them to list on the exchange for a long time.
Good points, Evan. And it's something that comes up a lot in conversations that we have with clients as well. And it's more and more research is coming out showing there's not only a governance connection here, but a performance connection. Those companies that are embedding this kind of thinking more holistically, more thoroughly into their overall operations and organizational structure right up to the board level tend to outperform and tend to be more resilient. And so that the audience realizes that you're not just preaching to them, explain a little bit about your other role. You actually do this for Nasdaq, don't you? You measure, manage, and report on this information on behalf of Nasdaq. Is that correct? I
do. I'm the worker bee more than anything else. So I do everything that we do internally, and that's recruit and retain benefits for employees, team volunteering, corporate philanthropy, community service, creating a service-oriented culture here at the company. Nasdaq is a fairly small company employee-wise, but we have a large number of global offices, and we have a fairly big brand. So our participation in certain things definitely has some value. We leverage the podium that we have at MarketSite and through media channels to talk about this issue. We've been out front in terms of talking about exactly what you were just talking about. We are persuaded that there is a connection between companies that manage this aspect of their business well, environmental, social, and governance performance, maintaining and integrating best practices as they evolve, and financial outperformance, lower cost of capital, lower shareholder turnover. I mean, there are lots of connections. It could be causation, it could be correlation. That's the eternal debate, but there is a connection.
And there's kind of one of the most significant things that we're noticing a lot of is that whether you're public or private, it doesn't really matter anymore, because some large customer is going to turn to you and say, hey, as my supplier, I want to know that you're doing this too, and I'd like to know that you're measuring, managing, and disclosing this information in the public domain. How are you looking at your own supply chain, Evan, or do you know of any other anecdotal stories like that where the supply chain ripples really affecting public and private companies?
Well, you're absolutely right. I mean, there's no geographical or commercial or sector or industry or public versus private boundary that it absolutely protects you from disclosure on this topic, because as we have increasingly global supply chains and increasingly global markets, the people who care about this are able to reach out and send you a survey or ask for answers on a questionnaire, or prospective investors have a questionnaire that you need to fill out in order to attract their attention. So there's really no safe harbor from disclosure on this. So that's one reason why you might want to just take it seriously and start to look at the value for your company just in terms of doing business and operationally. But the other part that you mentioned is also true too. There is a value in being more efficient. There is a bottom line impact in shoring up your supply chain, limiting your number of vendors. It limits risk. It limits financial exposure. That's what Nasdaq has done internally. We, have been going through a lengthy vendor review process and publishing our own supplier code of conduct and limiting the universe of suppliers who participate with us. We had a great call a couple of sessions ago with Microsoft, where they talk about all the efficiency gains that they've made on the supply chain side. And Microsoft is one of those companies who's not in it for the goodwill. I mean, they're in it to save money and to work efficiently. So there's lots of reasons why this makes sense. The philosophical and ethical one is in the mix, but it's certainly not the top of the list for most businesses.
Great, thanks again, Evan. And so anyone out there online, you are able to write in through the question platform and drop us a note. You can get it to us during the session. We can bring it up with Evan later on. We're going to start to transition over to WBCSD and over to Emily Grady and Chris Walker. Chris is the director of North America's efforts for WBCSD, and Emily is a manager there. In fact, we were all together in Paris for COP21 recently. That includes Evan Harvey from Nasdaq, because there was so much going on over in Paris around the discussions and the final agreement that's come out of COP21. So the thing that you should be thinking of right now, if you're an issuer on the phone call and you're feeling like this is just yet another burden on me as someone who has to do a lot of other reporting and disclosure, is realize that there's actually some pretty good roadmaps for you out there. And we're going to let Chris and Emily talk a little bit more about what WBCSD is and how they're bringing some of those roadmaps to bear. Chris, Emily, over to you.
All right. Thank you, Mike. I want to express our thanks to both Brown Flynn and Nasdaq for the opportunity to present here. My colleague Emily will talk a little bit further about the SDGs and the Sustainable Development Goals and what they mean as kind of the architecture for sustainability over the next 15 years. I wanted to give you a little bit of a thumbnail, though, as to who we are at WBCSD. We're a 20-year-old organization. We were founded to be a voice for the UN process, in the sense that there wasn't a business voice in the global sustainability agenda. And the thought for creating WBCSD was to create precisely that. And what we saw with Paris, and what was really a major success in Paris, was that business for the first time was truly engaged in the conversation, and it was actually embedded into the negotiation process by the French government, which made that quite unique. I like to call us a chamber of commerce of the most sustainable, active companies. We've been organized since 2010 under a Vision 2050 report that had come out, basically looking as a forecast as to what would be a sustainable world and what would that look like in 2050. And in essence, how 9 billion people will live well within the limits of the planet in 2050. And then the idea from there was to backcast and to look as to, okay, what are the priority areas we would need to focus on over the next 30 years to get us to that point. And we've been operating, you can go to the next slide, we've been operating under these priority areas since, and it's under Action 2020 initiative. And so basically we drilled down the 9 priority areas on a global basis to 6 areas that we are our focus clusters. And just to mention, for instance, on the climate and energy piece, we ran an initiative called the Low Carbon Technology Partnership Initiative, kind of quite a mouthful as far as an acronym, LCTPI. But the whole point of it was to show what business thought they were capable of doing to significantly reduce emissions. And there's a report I would recommend that you could look at. You could pull it down from our website. That was done by PwC on the possibility, the emissions reduction possibility of the 130 companies that had participated in the 10 technology areas under this LCTPI. We have basically 3 priority areas that we work on, and what I like to say is that we work on a pre-competitive level, and we're member-driven. So our members lead in the areas that we work on. We have to have member consensus in the sense to initiate a new area or project. And so we develop innovative business solutions. We improve on the business case for sustainability, and we facilitate collaboration. So on the collaboration side, for instance, we are definitely a big tent organization and work with numerous players in the NGO and business community. We also have a number of sector clusters where industry sectors collaborate. For instance, we have 26 pulp and paper companies collaborating on our forestry services group, as well as a cement group and a tires group, and et cetera. And then I just wanted to give just an overview as to who our members are, and you can see it's a lot of big names, and particularly leaders in the sustainability field. We're at 201 members currently, of which Emily and I look after the 38 members that are headquartered here in the U.S. So I will now turn to my colleague Emily Grady to discuss the SDGs and the SDG Compass. Emily?
Thanks, Chris, and thanks to Evan and Mike for including us again on this conversation. So I'm going to talk a little bit about a tool that we have developed in collaboration with GRI and the UN Global Compact. It's called the SDG Compass, Sustainable Development Goal Compass. And it's a guide to help companies align their strategies as well as manage and measure their contribution to the Sustainable Development Goals. It was launched this past September at the UN Private stage where companies are starting to use it, and where we'll, over the next months and a couple of years, start to see some results. Next slide, please. So the Sustainable Development Goals, to provide a little bit of background, are a series of goals that succeed the Millennium Development Goals. They were developed through a highly inclusive multi-stakeholder process with input from civil society, from governments, from business, and the idea is that they set an agenda for what does the world need to achieve sustainable development by 2030, between 2015 and 2030. What are the priorities, and how are we going to get there? And so the goals themselves set out those priorities. There are 17 goals and 169 targets. And now we, as stakeholders, are kind of tasked with figuring out the implementation pathways for achieving them. So there's a role for business, there's a role for government, and there's a role for civil society in addressing and achieving the goals. And sort of the purpose of today's conversation is to address that to some degree. And I'll highlight that, of course, 169 targets and 17 goals are a lot for any business to try to look after. And so one of our objectives with the SDG Compass is to help companies prioritize where their impacts can be they can maximize their positive impacts and minimize their negative impacts along each of the SDGs. Next slide, please. So I'll just highlight that while business has not always been included in UN processes, it is viewed as a vital partner now. And you can see some quotes on the slide from Secretary General of the United Nations, Ban Ki-moon, highlighting the role of business in bringing creativity and innovation and scale and finance to solutions that can help build on achieving the SDGs. So you might wonder, what is the business case? Why would I get involved with the SDGs when they're primarily targeted to governments? And that's a little bit of a misconception in that they are, like I mentioned, were developed through a multi-stakeholder process. And there are several clear business opportunities related to aligning business strategy with the goals. So to begin, identifying future business opportunities. The SDGs aim to redirect public and private investment flows towards each of the challenges the goals cover. And so in doing that, they start to define new markets for companies to deliver on innovative solutions and start creating transformative change around the world. They also enhance the value of corporate sustainability. And so, as we heard from Evan and Mike earlier, we know that there's value. We see it in terms of the value of companies financially, but the SDGs can also strengthen economic incentives for companies to use the resources more efficiently or switch to sustainable alternatives, helping to continue to internalize some of the externalities that aren't accounted for in other ways. The SDGs also strengthen stakeholder relations and help maintain policy development. They are a consensus around how the globe and all of its entities and institutions ought to move forward between 2015 and 2030. And if companies align their priorities with the SDGs, they can also strengthen engagement of customers and employees and other stakeholders, as well as avoid some reputational risk or legal risk if they don't do so. The next one, stabilizing societies and markets. Businesses can succeed. Businesses cannot succeed in societies that fail. So investing in the achievement of the SDGs, there's the opportunity to develop rules-based markets, transparent financial systems, and non-corrupt and well-governed institutions. So again, another sort of clear business incentive. And then lastly, having a common language and shared purpose, the SDGs help unite various actions across a given sector or an entire value chain towards a common language and common goals. And that just helps the world start to aggregate up the successes and achievements related to the SDGs. Next slide. Thank you. So just a quick snapshot. We've looked at business awareness of the SDGs, and we find that while 92% of businesses are aware of the goals, only 13% have identified the tools they need to take action. And the purpose of the Compass is to help close that gap. Also, 72% of businesses say that they're planning to take action, but only 29% so far are setting goals that align with the SDGs. So the Compass also helps companies engage in that initial process to align their strategies and goals with the Sustainable Development Goals. Next slide, please. So the Compass itself is built around 5 steps. There's a guide that explains the 5 steps in detail. There's also a live inventory of existing business indicators from GRI and CDP and SASB, among others that your companies probably are already using. And also business tools, an inventory of business tools, such as the Greenhouse Gas Protocol and our WBCSD water tool, that can also help companies start to look at their impacts in relation to the SDGs. We're in the process of developing 2-page overviews for each of the SDGs, which will also be available on the website, which you can note at the bottom of the slide here, sdgcompass.org. The tool is free and open to anybody, so take a look when you have a moment. So to walk through each of the steps, the guide basically first helps companies understand what the SDGs are and why they're relevant. I just shared with you what we see as the key business case. An important point to note is that the SDGs assume that business is already operating as a responsible entity and complying with the relevant legislation and respecting international minimum standards, as well as addressing any negative human rights impacts. So that's sort of a baseline, and the SDGs are supposed to build upon that, and that's sort of where the guide begins. In step 2, we recognize that not all of the 17 SDGs are equally relevant to each company, and the greatest impacts may be beyond what any given company owns or controls. So we recommend to seize the most important business opportunities represented by the SDGs, as well as to reduce risks. We recommend that companies assess the positive and negative, as well as current and potential impacts across the entire value chain. And again, this gets back to what we were chatting about with Evan and Mike earlier, that it's really important to look beyond just the 4 walls of the company to where they have impacts, pre and post production and so forth. So we first recommend mapping out the value chain and assessing areas of impact. After that, you can refer to the indicators list on the SDG Compass website and start to collect some data on each of the SDGs and sort of look at where the largest impacts are or smaller impacts are and make some decisions based on that. Finally, that data can be used to define priorities. And one tool that WBCSD has developed, called the Natural Capital Protocol, and also there's a social capital protocol under development that are going to be standardized frameworks for business to measure and value their impacts on natural and social capital. So they will also be able to help guide that defining priorities series of actions. So the next step, building off of that, is setting goals. And you know, we all recognize that goal setting is critical to business success one way or another, and helps continue to foster shared priorities and performance across an entire organization. So the first step is really to define goals. And choose a baseline. So sometimes goals are best reflected in terms of at a point of time or a period of time. Sometimes a goal is best looked at in absolute terms or in relative terms. So for each goal, we recommend kind of putting forward very specific and clearly defined criteria. Then setting a level of ambition is key here, because without ambitious goals will drive much greater impacts and better performance than moderate goals. So this can affect sort of the time frame of the goal, or also the reputation of the company as it works towards achieving the goal. An interesting sort of conceptual way to think about this is the diagram indicated on the slide, where previously, generally, companies would select goals looking outward. And so thinking about here we have a series of impacts, how can we mitigate those impacts, and looking from inside out. The SDGs, because they're a global priority that has been agreed upon by all of our member states and of the UN and actors from civil society as well as business. The SDGs are sort of goals from the outside that can be used to look inward towards a company's operations and strategy. And so we recommend in this goal-setting step for companies to kind of use that approach to look in and based on the materiality assessment in step 2, define goals from that standpoint. And lastly, the announcement to announce the commitment to the SDGs. Making these commitments public is a great way of building buy-in from various stakeholders and pushing forward various partnerships and collaborations across the sector to help maintain accountability and transparency around the goals. All right, so on to step 4, integrating. Integrating sustainability into the core of business and governance and embedding the Sustainable Development Targets across all functions in the company is really key to achieving the goals. So we all know that we're monitored and measured annually based on our targets, that our KPIs as individuals set from the beginning of the year. And if every person from HR to engineering to R&D has some aspect of this SDGs integrated into their personal performance, it's a really great way to make sure they get accomplished. And people from looking at different vantage points within an organization will have different views on how to achieve them. So this step focuses on integrating the SDGs across the company and embedding them in all functions. Also, we like to highlight the role of partnerships here. Increasingly, business and civil society interact, business and government interact, and this integration step is a great way to make sure that all key stakeholders are involved in these conversations, and sometimes civil society might be able to help with that integrating part of the goals in certain parts of the company. And the last step of the SDG Compass is reporting and communicating. So effective reporting and communication builds trust, and this is really key. In companies that are operating around the world, that have points of their supply chain on many different continents and many little communities, having clear reporting and communication practices really help build trust and transparency, and it supports value creation across the board. So we have put forward in the guide some specific recommendations for how reporting and communications can be made consistent over time as companies start making achievements towards their goals related to the SDGs. So on the next slide, you can just see the website that where you can find the tool and the list of indicators. And we'd be happy to answer questions or if companies are interested in exploring this more deeply, to have a one-on-one conversation to look at that more further.
Great.
Thank you.
Thanks a lot for that information, Emily, and for taking us through that. I've got a few questions that are coming in, a couple of my own that I wanted to talk through. So, Evan, I want to turn to you. You said specifically this, you are the doer inside of Nasdaq, so you're figuring this stuff out yourself to report, measure, manage, and disclose this information on behalf of Nasdaq. When you got started in this, were you just awash with different options? Was it completely confusing? And how did you progress your own efforts to get aligned with all of the things that are going on out there?
Well, we did the things that most people do. We talked to experts in this space. We found investor groups through Ceres and PRI and other places where we wanted to know what their concerns were and where they thought stock exchanges could actually help. If there was something that was stalling the conversation between themselves and potential investment targets, and the stock exchange could step in and broker an engagement, and we would certainly be willing to do that. But mostly we just wanted to understand the space. And working early on, several years ago, with the reporting frameworks, especially GRI and the Carbon Disclosure Project, gave us a sense of the sort of landscape of reporting and the kinds of issues that were talked about in sustainability. Mike Wallace, Mike who I'm speaking to now, has a famous slide that he uses in presentations that talks about the wide array of issues that are actually covered by the term sustainability. And it's everything from supply chain to social practices to diversity management to board practices. There's a wide variety of things that actually fall under that umbrella. And we wanted to understand that entire landscape so that we could do two things. One, do it ourselves as a public company. We began reporting for the first time, measuring and tracking energy intensity and water usage and employee engagement for the first time. And then as purposefully to sort of be an example for the other listed companies to follow, because we weren't going to do this if it was going to take a lot of time or energy or money or resources, because we don't have any of that. We work very efficiently here at Nasdaq, as I'm sure a lot of companies do. So we were able to get to a basic level of competence pretty fast just by aligning ourselves with experts in the space. And we found expertise and guidance from issuers as well. We have a number of issuers at the top end of the market cap, Intel, Cisco, Microsoft, Whole Foods, Costco. These are companies that are managing this extremely well, that have been in it for many, many years, and that taught us, frankly, best practices in the space so that we can distribute those out to the rank and file issuers who may not be as adept.
Thanks for that, Evan. And kind of to reinforce that and that storyline of thinking about the people that are on this call and looking at some of their titles, we don't want you to feel overwhelmed by the amount of information that we're presenting to you today. We want you to realize that there's actually been a lot of thinking that's been put into these issues already. We'll get into some more specifics around KPIs in a second, but imagine there's a large group of stakeholders out there that are interested in this topic of sustainability. They all get together and brainstorm together what are the most important issues that all companies should be thinking about, and then you as a company take those issues and identify which ones are most material to your organization, to the type of business you're involved in, the industry and the global footprint that you have, where you're buying from and where you're selling to. That materiality process is something that's very important to companies as they think through how to react to the market's demand for this kind of information. Chris Walker, I got a question for you that's coming up, and also I'm going to couch this in a little bit of my own knowledge about your background in the industry. You've been at this for quite a long time. From a board level point of view and directors and officers point of view, now that you're with the WBCSD and you're talking to a lot of U.S. companies, what are the biggest challenges that you're getting pushback from with companies when you're talking to them and trying to, persuade them to get involved, persuade them to join the WBCSD? What are most U.S. companies saying to you?
Yeah, Mike, I would say, and certainly you referenced my longevity in this space, so I'll kind of reference it back, in that one of the things I was very encouraged, I've been in this role just a little over a year now, in the past year, the receptivity in the U.S. market has been much greater than I would say I've ever seen, in embracing sustainability as a key element of long-term business performance. used to be, in the sense you could say, a kind of a select group of companies that did this because either their business model was in trouble, or that they saw this as a great opportunity to kind of really distinguish themselves. But what we're seeing now is kind of, you could say, and I don't want to use the word grudgingly, but that's the word that just came into my head, was that, you know, in the past maybe it was grudgingly people dealing with this. Now I would say there's a recognition that this is you know, core business. So from an officers and directors point of view, one of the things that I've always thought are the companies that really truly get engaged on sustainability issues, they do so best when led from the top. So, you know, often these initiatives are CEO-led, and the only downside I would say with that is that when a company does something purely because the CEO has said, okay, this is the area I want to work in, is that there's always the danger the CEO changes and then the company changes direction. And what is, I think, is vital long term, and you can see this now with all the reporting initiatives out there, is that there's a requirement, in essence, that the board of directors understand what is being publicly disclosed. And so the companies that I think are doing this best now long term are actually run out of their board of directors. They have committees on sustainability, for instance.
Yeah, good point, Chris. We're seeing a lot more of that too with the work that we do with companies, and we've been asked over the past couple of years now to come present at the various conferences of boards of directors called the National Association of Corporate Directors and the Society of Corporate Secretaries, and also the National Investor Relations Institute. Our audiences that we are seeing more requests from them to come in and talk to their members about these issues. And again, when we present this kind of information, we generally do it with partners like Bloomberg or partners like Nasdaq even. Evan came with us to Chicago for NERI's latest conference to explain what was going on in the marketplace, and that whether you like it or not, the demand for this type of information and this type of disclosure is not going to go away. And I think the other point to be considering here is that, as Evan also mentioned, you know, the supply chain ripple is not going away either. You've seen it before with your companies. When ISO 9000 rolled out, it started to ripple through supply chains. We went through the Y2K period. Everyone was asking suppliers to make sure they were Y2K compliant. And now we're seeing more and more large institutions, even the federal government and state governments and city governments, asking suppliers to measure, manage, and report, and in some cases specifically calling out things like GRI or CDP or UN Global Compact. I think that relates then to something that, Evan, I want to bring up with you. Marissa, I don't know how easy it is for you to flip around the slides, but if you could go to slide 14 where the WFE's guidelines are set out there, that would be great. That'd be helpful. But Evan, you know, I think when I look at the Sustainable Stock Exchange Initiative and then also the WFE's initiative, there's a lot of thoughtfulness to these efforts. You guys really thought about other frameworks that were out there and how these things align. And particularly, given the discussion we've had about SDGs, how does the work that you all have done align with the SDGs?
Well, obviously, we came up with our proposal and the guidance that came out of the two groups in the third and fourth quarter of this year at the same time that the Sustainable Development Goals were coming out and making public. So we definitely feel that they are aligned. I feel like the SDGs are going to become the sort of preeminent organizing framework for a lot of corporate sustainability discussions. These are global problems that require global cross-border, cross-market solutions, and the more that each individual company or market or investor can contribute to solving one of those problems, the more progress we'll make on the whole. You know, we've been asked at the exchange level in terms of the SDGs to focus on 4 particular goals that seem to have the most potential for us to drive change. And that's Goal 5, gender equality, Goal 12, sustainability information. Certainly we've already pushed quite hard on that, getting more sustainable information from listed companies into the mix. Goal 13 is climate change, you know, the ability of stock exchanges and listing venues to bring companies to market and to facilitate smart development of energy sources and other things, and remediation companies that are tackling that issue. And then, of course, where I think it makes the most sense, global partnerships, Goal 17, when you talk about just Nasdaq. And Nasdaq is a family of North American and European and Nordic exchanges. We have a very broad global reach to a lot of different companies and a lot of different regulatory agencies and a lot of investors. You talk about the parallel effort at the UN and the Trade Association for Stock Exchanges. It's really virtually every listed company on the planet, and it really is every potential market on the planet. So that kind of scale offers a lot of opportunity for partnership between investors and stock exchanges and regulators and other stakeholders in the process. And that's where the sort of quasi-regulatory role that stock exchanges play as this trusted intermediary between the three can really come into play.
Thanks for that, Evan. So we're about 50 minutes into this call, into the webinar. Like I said, we're recording this. It will be available afterward. You can certainly share this with your colleagues. We'll let all of you who registered and who are on the call today know where that recording lives. You're more than welcome to write in your questions. Fortunately, because of the technology and because of the number of people on the webinar, we have kept all of you on mute. So if you do want to write in a question, please do throw through the platform. Kind of along the similar lines of this, thinking about the person who's on this call who may suddenly be seeing some unusual questions percolating up through Investor Relations Office. Some shareholder has written to them about some human rights issue or about climate change or some other type of unusual issue that an investor relations officer might not see. How do we make life easier for them? And so given we're just coming off of COP21 and some of the developments there, and also kind of leveraging, Chris, your background with the various climate initiatives you've been involved with over the years, how do you help a company who's very new to this, who's just starting to get these kind of unusual questions in their inbox? How do you help them get started? How do you help them see the light?
Yeah, I mean, I think there's a number of ways. From a WBCSD angle, one of the things that I think we do best is that we have such a wide variety of companies that have been active for quite a long time in this space. There's a lot of lessons learned. There's a lot of experience out there, and our members are, as one of the benefits you could say for membership has been, is that companies are very open and willing, particularly on a pre-competitive basis, to kind of share their journey. And as we all know, sustainability is a journey, and so if you're just starting it out, to kind of identify the areas that are most material. I mean, that word obviously keeps coming up in this conversation, but that truly is the key aspect. And just relating that to the SDGs, for instance, is that one of the areas that we want to explore going forward on the SDGs is to look at what is the most material aspects for a sector. Because, to be frank, no one sets 17 KPIs. And so for a sector, there is going to need to be a prioritization as to what really makes sense from there. But to show that your activities, in essence, align with the SDGs, I think is absolutely vital. And the reason why is I think your stakeholders at some point will ask, since this is going to be the architecture for the next 15 years as to how the world will organize in sustainability, at some point somebody will ask you a question as to, well, if you're doing an activity that doesn't align with how the world is taking account for progress on these things, then why are you undertaking that initiative? And I think that could resonate all the way up to the board level at some point in time. And so I think it's absolutely vital to say, in context, this is we're doing our bit. This is how we're doing our part. And so from a company, just say starting this journey, I think the SDGs are a perfect place to start looking at and say, okay, these are the ones that would be most relevant, either for our direct business or through the types of businesses we engage, either through our customer base or through our supply chain.
Good stuff. So I think what we're hearing and what we've certainly reinforced through the series of webinars is that shareholders are definitely involved in these issues and definitely interested in greater transparency. The likes of BlackRock being on these webinars with us, but also being signatories to things like CDP and the UNPRI is evidence of their interest in this, and BlackRock owns most companies. So it's worth you as a publicly traded entity to look at your largest shareholders, do a little comparison of those largest shareholders against the signatories of the CDP and the signatories of the PRI. That'll give you a sense of whether or not your shareholders looking at it. What we regularly hear in these webinars, but also in other audiences, that The Investor Relations Office and the CFO will say, these questions aren't really coming up in our meetings with our shareholders. While that might be true, be aware that within the systems that these shareholders use, the Bloombergs of the world, the Thomson Reuters of the world, the MSCIs of the world, there is sustainability information already there. If you're not saying anything in the public domain about your own performance, then there is a blank in those terminals and in those systems. If you're choosing to leave that blank there, that means you're not being very transparent, and it leaves those activist shareholders scratching their head and wondering, are you not aware of these things? Are these things not important to you like they're important to me? Are you not reporting on these things because you have something to hide? And how and why can't you measure, manage, and report on these things when 80% and in some cases 90% of your industry is disclosing this information? So most companies out there have a Thomson & Reuters subscription. Most have a Bloomberg terminal. And it's worth taking a look at what your footprint looks like within those terminals. I think going back to Evan and Chris and Emily, let's get real specific here about a KPI. Again, coming out of COP21, if you're a company that's on this call, you've never done anything with this, you think this is a waste of time, why should I care about climate change? Evan, first for you. And what would I do as a company, and quite frankly, if I'm being asked questions about climate change, what am I supposed to do and disclose?
Well, first you're supposed to measure. I mean, first you should have a handle on how your operation works, the efficiency of your operation. Are you overpaying? Are you underpaying? Are you getting the service that you and the performance that you deserve based on your facilities, your manufacturing, your supply, your fleet, all the aspects of your operation that go into contributing to operational expenses? You should be asking those questions and managing these kinds of metrics internally, because things like renewable energy sourcing for data centers, I mean, these have bottom line impacts in short term. And measuring water usage, and we're coming into an era where these things are going to become prohibitively expensive, if not downright scarce. So if you're not planning for that, you're not doing a good job managing your business. First and foremost, you should be doing the internal management and measurement of this stuff. Secondly, and I think there's a discussion to be had there with investors, talk about it publicly. What can you talk about? It's not a matter of putting information out there that is detrimental to your brand. It's really just a matter of telling your long-term corporate story. If you're managing these kinds of questions smartly, and you are planning for a future that is going to change, and it's going to change for everybody in their space, smartly, you're going to attract attention, and you're going to have a fruitful discussion with groups like investors. Going radio silent sends the opposite message, sends the message, frankly, that there is no plan and there is no strategy. I'd like to say that sometimes it signals that the corporate strategy is so secret and so amazing that they don't want to talk about it, but that's really not the case, and that's not the signal that most investors pick up on.
Thanks, Evan. Chris and or Emily, with the last couple of minutes, what are the things that around carbon and climate that companies should be definitely thinking about right now?
Yeah, I mean, I think Evan covered it very well. I mean, obviously what gets measured gets done, right? So you need to start off with the measurement. But I would say the measurement should also make sure that it includes both your own internal footprint, but as well as your external fingerprint. By fingerprint meaning your supply chain, your customers, because there potentially may be vulnerabilities there, and not just from an emissions point of view, but there could be vulnerabilities as to whether your supply chain would be potentially vulnerable or subject to vulnerability due to weather changes and the like. And then I think just overall, how does this all affect from an enterprise risk point of view? Most companies, I would say, have not taken or elevated, you could say, climate change into an enterprise risk analysis, and I think that's where it belongs. They've done it from kind of an energy point of view, and I think it needs to be elevated up to kind of more comprehensive, because it's not just about the energy use. It's about the materials you're using, the availability, the cost, et cetera, of these, and the efficiency that you use these materials as well.
Thanks a lot, Chris. So I want to just respect the hour that we've covered here. I want to thank again Evan Harvey, Chris Walker, and Emily Grady for the great information they've shared with us today. You could find this webinar recorded and up on our site in the next week or so. We'll also send out an announcement about it. For any last words, I want to pass it over to Evan, our partner and host in this webinar series. Evan, anything you want to say or any kind of final thoughts before we sign off?
Just thanks for your support this year. Thanks for a great series of discussions. I want to encourage everybody who's listening either live or via the replay to get in touch with us, either Brown Flynn or Nasdaq, about opportunities and discussions that you want to see on the agenda for next year. It's a great format for airing concerns from the corporate level, and we want to make sure that we're staying relevant for your needs. So that's where I would leave it.
Thanks, Evan. And so for those of you on the call, we're planning out a series of continuing webinars like this with Nasdaq, but also in partnership with WBCSD. So stay tuned for the information around that, and be sure to look for our newsletter and news information about that. This is Mike Wallace for Brown Flynn, and I want to thank you all for tuning in today, and look forward to seeing you on one of the future webinars. Thank you very much. Bye-bye.